This video is for the calculation of break-even. So break-even is when total revenue meets total costs. So in other words, the firm is able to identify the amount of goods or services they have to sell in order to cover all their costs. But if we consider it from the point of view of contribution, contribution is the difference between your sales price and your variable cost. So once you calculate your contribution, you can work out how many units you have to sell to contribute towards paying off your fixed costs. So the formula for break-even is your fixed costs divided by your contribution. Now to quickly show this, I'm just going to use this example here to illustrate this formula. So for this good, we've got our price of $500. We've got our variable cost of $300, which gives us a contribution of $200. So for every unit that is sold, $200 goes towards paying off their fixed costs. Now their fixed costs are $500,000. So the next step would be, so it'd be 500,000 divided by $200 equals 2,500 units. Now it's really important that you write units afterwards, or whatever the good or service might be, because that is a common mistake that's made by students. They either just put 2,500, which they'll lose a mark, and that is in most exam boards, or they accidentally put it as a monetary value. So for example 2,500, which is wrong, because remember we're looking at break-even point in units. Now if you wanted to work out what the break-even point was in total revenue, then you'd get your units of 2,500, which you've just calculated from the previous formula. You times it by your sales price per unit, which is $500, and that would get you 1.25 million. So you know that you'd have to generate a revenue of 1.25 million in order to break even, or you'd need to sell 2,500 units in order to break even. Now when you're calculating break even, they often give you enough information to calculate the margin of safety as well. Now simply the margin of safety is it's another financial ratio, but it measures the amount of sales that exceeds the break even point. Again, it will be calculated in units, and it would be your actual sales or your planned output, or even maybe your maximum output minus your break even point. So imagine in this business they had a planned output of 5,000 units. So they were planning on selling 5,000 units, but they knew the break-even point was 2,500 units. The simple calculation for margin of safety would be 5,000 units minus 2,500 units, and that would obviously be equal to 2,500 units again. So not only have they got a break-even point of 2,500, but they've also got a margin of safety of 2,500 units.